Wednesday, July 21st, 2021, Maneco 64, home of alternative economics and contrarian views. Today, we're going to look at why physical gold and silver and having some outside the banking system, the financial system, is so important. Not just to safeguard your savings, the purchasing power of your savings, not just to maybe try to make a bit of a profit maybe through investing in mining stocks. No, for me, the most important point about having physical gold and silver is fighting big government, is fighting the fraudulent nature of the banking system. For me, that's what it's all about. And of course, many of you have heard that before, many of my old viewers, but with all the new subscribers I'm getting, with a lot of views that I've been getting lately in my videos, there must be a lot of people out there who sometimes think, why is this guy going on so much about gold and silver? Gold and silver haven't done well this year. But it's more than just making money with gold and silver. And I would say that gold and silver, of course, are money. So you can't make money by holding gold and silver. But that's a different story. So what I'm going to do today is I'm going to go briefly over and actually refer you to a few essays and a book that I think will help you understand where I'm coming from. About money, about having gold and silver outside the system. I think it's more imperative than ever, especially with what governments have done in the last 16 months or so. We've gone from a relatively free Western world to a draconian authoritarian world where governments are trying to coerce us to do things we don't want to do. And yes, they've been pushing a lot of propaganda through the mainstream media to try to convince us or to try to scare us about what's going on in the world. And the current monetary system that we have, it's a fiat currency system. The money is backed by nothing, or the currency is backed by nothing. We don't even use money anymore. So it's not even a monetary system. And the only way for this system to keep going is for you to be in the system. And how is one in the system? Well, by holding a lot of fiat currency or digital entries in your bank account with one of these banks. And even the small banks, unfortunately, are all in the system because they're all dependent on the big Wall Street banks like JP Morgan, Bank of America, Wells Fargo, Citibank, all those banks. Same thing goes for the banks here in the UK. There are even fewer banks. There's not many banks here in the UK. So by holding balances with these people, with these bankers, they'll take that and they'll leverage it. They'll turn your pound or dollar into 10 and risk it. And they will buy assets with it. And they'll make even more currency with it, not money. And the central bankers and the governments will help them along. They'll bail them out. They'll exempt them from global minimum taxes. I'm not saying that I agree with taxes, but we have to pay them. The bankers don't. So it's all geared up against us. And by having and keeping more and more balances with them, we're financing them. We're financing our own slavery, so to speak. So holding gold and silver, physical gold and silver, and I know not everyone can do that, but if you can, I think it's the best thing to do, especially if you like being independent, self-reliant, not dependent on governments, sick and tired of financing them. We already have to do it, unfortunately, through taxes. That's a different story, of course, but we can do a little bit to hurt him by stacking, so to speak. And that's why the silver squeeze movement as well, since February, has been very important. It has died down a little bit, but it's far from being over. And we need to keep at it slowly but surely, like the tortoise. We need to keep going. One might think, well, these people have so much wealth and power. Well, I would argue that that wealth is sitting on a foundation of sand. And the more real money we take out of the system, the harder it will be for them to keep going. So that's my message for today. So before I look at the markets, I'm just going to refer you to a couple of essays so that you can see what I mean by when I say that gold and silver, of course, as well, are so important to economic freedom. And with that, we'll go to the first one. It's Gold and Economic Freedom. And yes, it was written by Alan Greenspan. And we know that Alan Greenspan, he turned coat. He went from being a freedom-loving, laissez-faire, sound money individual to becoming the chairman of the Federal Reserve. But be as it may, he wrote a great essay in 1967. And I think one needs to read this to understand. And I read this many years ago, probably 20 years ago, maybe a little less. And that's what's kept me in this game of stacking. So he says here, I'm not going to read the whole essay. I'm going to put a link below in the description to the essay, and you can read it yourself. But I'll just give you a taste of what he says. An almost hysterical antagonism toward the gold standard is one issue which unites statists of all persuasions. So you see, it doesn't matter left or right. They seem to sense perhaps more clearly and subtly that many consistent defenders of laissez-faire, that gold and economic freedom are inseparable, that the gold standard is an instrument of laissez-faire, and that each implies and requires the other. And he goes on to say, in order to understand the source of their antagonism, it is necessary to first understand the specific role of gold in a free society. So I'm going to stop right here. I'm going to recommend another essay here. This one is not by a turncoat, but his son kind of is deeply ingrained in the deep state, so to speak, in the fiat currency system. He's done really well for himself financially, built a lot of wealth, paper wealth maybe, but I'm sure he's got some hard assets, tangible assets. It's by Howard Buffett, U.S. Congressman for Nebraska. And this was reprinted from the Commercial and Financial Chronicle, May 6, 1948. And of course, back in 1948, Americans still couldn't own monetary gold. FDR made it illegal in 1933. It was only on January 1st, 1975, of course, that Americans could do it. Yes, there were ways around it, numismatic coins. And also, I guess, when Alan Greenspan wrote his essay, that was the same deal, right? So what does Howard Buffett say? Well, he says human freedom rests on gold redeemable money. And again, I'm just going to give you a taster for this essay or presentation that he gave. It says, is there a connection between human freedom and a gold redeemable money? And I would argue as well, having silver as well, a bimetallic system is very important, or a system that government is not involved. People should use whatever money they want, of course. At first glance, it would seem that money belongs to the world of economics and human freedom to the political sphere. But when you recall that one of the first moves by Lenin, Mussolini, and Hitler was to outlaw individual ownership of gold, you begin to sense that there may be some connection between money redeemable in gold and the rare prize known as human liberty. Also, when you find that Lenin declared and demonstrated that a sure way to overturn the existing social order and bring about communism was by printing press paper money, then again, you are impressed with the possibility of a relationship between a gold-backed money and human freedom. In that case, then certainly you and I as Americans, or anywhere in the world, of course, I would say, should know the connection. We must find it even if money is a difficult and tricky subject. I suppose that if most people were asked for their views on money, the almost universal answer would be that they didn't have enough of it. And I'll finish here after this short paragraph. In a free country, the monetary unit rests upon a fixed foundation of gold or gold and silver, independent of the ruling politicians. I would say the ruling elite as well, the bankers. Our dollar was that kind of money before 1933. Under that system, paper currency is redeemable for a certain weight of gold at the free option and choice of the holder of paper money. And it was redeemable, of course, at a fixed rate. You couldn't change it. It's like it would be unfathomable to change the length of a foot or the length of a mile. So it should be unfathomable to change the value or the weight of money, I would say. So to finish off, I'm going to recommend you a book now. It's not very long. It's very easy to read. And it's called What Has Government Done to Our Money? And the Case for a 100% Gold Dollar. There you go. By Murray Rothbard. He was an American economist of the Austrian School of Economics discipline. Austrian School, of course, is the complete opposite of the Keynesians. Keynesians espouse big government, debt, fiat currency, government spending, control, authoritarianism. I mean, Keynes even said in the foreword to his German edition of his General Theory in 1936 that his ideas were better suited for an authoritarian kind of society. So why is this so important, this book? Well, because it will give you an idea of how money started, what money is. And Rothbard uses the regression theory analysis that the Austrians like to do. And what is that? Well, he goes back to the beginning to see how it started. You can't know how something is today if you don't look at how it started. And that's basically what it does. So I'm going to give you a taster here as well. So this is chapter 1, Money in a Free Society, the Value of Exchange. So how did money begin? Clearly, Robinson Crusoe had no need for money. He could not have eaten gold coins. Neither would Crusoe and Friday, perhaps exchanging fish for lumber, need to bother about money. But then society expands beyond a few families. The stage is already set for the emergence of money. To explain the role of money, we must go even further back and ask, why do men exchange at all? Exchange is the prime basis of our economic life. Without exchanges, there would be no real economy and practically no society. Clearly, a voluntary exchange occurs because both parties expect to benefit. An exchange is an arrangement between A and B to transfer the goods or services of one man for the goods and services of the other. Obviously, both benefit because each values what he receives in exchange more than what he gives up. When Crusoe, say, exchanges some fish for lumber, he values the lumber he buys more than the fish he sells, while Friday, on the contrary, values the fish more than the lumber. From Aristotle to Marx, men have mistakenly believed that an exchange records some sort of equality of value, that if one barrel of fish is exchanged for 10 logs, there is some sort of underlying equality between them. Actually, the exchange was made only because each party valued the two products in different order. Why should exchange be so universal among mankind? Fundamentally, because the great variety in nature, the variety in man, and the diversity of location of natural resources. Every man has a different set of skills and aptitudes, and every plot of ground has its own unique features, its own distinctive resources. From this external natural fact of variety come exchanges. Wheat in Kansas for iron in Minnesota, one man's medical services for another's playing of the violin. Specialization permits each man to develop his best skill and allows each region to develop its own particular resources. If no one could exchange, if every man were forced to be completely self-sufficient, it is obvious that most of us would starve to death, and the rest would barely remain alive. Exchange is the lifeblood, not only of our economy, but of civilization itself. So I'm going to stop here. I could go on because he talks about barter and how that leads to indirect exchange. And that indirect exchange is basically when you use money. And I'll sum up what he says about indirect exchange. Well, it's when you use the most marketable commodity. And what is the most marketable commodity? Well, it's whatever a group of people or society or economy decide that they always accept in exchange for anything. So there's no barter. And that is money. Yes, and historically it has been many things, but it has also been gold and silver. It has been for thousands of years. It could be cigarettes, like it was in Germany after the end of World War II. It could be toilet rolls, like it almost was maybe last year. So I'll leave it to you to find out about that, but I highly recommend this book. I highly recommend those two essays. I'm going to put links to them in the description. I'm going to put a link to a free PDF of this book in the description. And you might want to buy this book as well, not just have a PDF file. So yeah, you can go to the Mises.org website to buy this book. The Mises Institute, of course, is the premier institute in the U.S. and the world, I would say, for teaching the Austrian School of Economics. So let's look at where the markets are then this morning. It's 8:30 a.m. London. So we've got spot gold at 1809. That's down $1. The high's been 1814, low 1805. Silver is catching up today. It's actually outperforming gold, which it hasn't done in a few days. It's at 25.10, up about 16 cents. The Dow, of course, we're seeing a lot of volatility in the market. We were down 700 on Monday. Yesterday, the Dow is up just over 500, I think. So not a great situation when you get this kind of volatility. We're going to have to keep an eye on the markets, of course. This morning, the Dow futures up 75. The NASDAQ 100 futures up 5. The S&P 500 is up 7 points. The FTSE is up 66 points or 1% at 69.45. So it's catching up with the move in the Dow late yesterday. The FTSE this morning. To the currencies, the pound is continuing to lose ground here. We've broken some key technical levels. We're now trading at just at 136. We're breaking 136 here as I speak. We're down about 0.2%. So not looking good for the pound. The euro also is down about 0.2, but it's outperformed the pound a little bit of late. It's at 117.55. Dollar's up slightly versus the Japanese yen. It's trading exactly at 110, and the dollar is down about 0.1% versus the yuan at 647.88. The Aussie dollar is down 0.5%. So the Aussie dollar continues to drift lower here. It's just below 73, and the dollar is up 0.25% versus the Canadian dollar at 127.13. So why are these currencies like the Aussie and Canadian and the pound as well coming off? Well, I think it's a bad sign for overall worldwide financial markets. These currencies, these peripheral currencies, so to speak, get hit hard when there's financial turmoil. So we need to keep an eye on them as well. There are signals that something is wrong out there. So to some of the non-monetary commodities, we got WTI crude unchanged at 67.15. High-grade copper down 0.5% at 4.24. And to finish off, the 10-year yield is creeping back up a little bit here. It's up just over 1 basis point at around 1.23%. So if you enjoyed this video, make sure you hit the like button. Please share far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.